What happens when you pit Indian companies against their global counterparts? How does Lenskart compare to Warby Parker? What about Zomato and DoorDash, Ola Electric, and new technologies? Well, you've come to the right place because this is Backstage Business Beatdown, a new series where two companies go head-to-head in a financial fight for supremacy. I'm Caleb, your host, and today in the red corner, weighing in at 6,875 crore rupees, or $820 million in revenue, and representing the Republic of India, we have Zerodha. And in the blue corner, weighing in at $1.87 billion in revenue and representing the United States of America, we have Robinhood. But don't be deceived by the more than $1 billion disparity in revenue here, because both of these companies are heavyweights. Zerodha is almost entirely bootstrapped and highly profitable, while Robinhood burned through billions in venture capital to grow quickly and is now a public company. Now, the goal of this new series is to contextualize India's startup ecosystem and to better understand the differences in technique, business culture, market and investor expectations, and overall performance. And what better way to do that than through comparison? We do want to take a non-biased approach to making this content though, researching and presenting it. And so this is a non-sponsored video. We didn't even reach out to Zerodha or Robinhood for making this video. And while the goal here is for this to be an educational series, we're presenting it like a beatdown so that it's more fun to watch. So with that out of the way, this fight has 4 rounds: origin, business model, financials, and market. And do keep in mind that while businesses in the United States follow a January to December financial year, Indian businesses follow an April to March financial year. Zerodha was founded in 2010 by brothers Nithin and Nikhil Kamath in Bengaluru, India, and it started as a very small bootstrapped venture. Traditional VCs turned them down, and so they started Zerodha with very minimal initial capital, mostly from Nithin's savings and a single Singapore-based angel investor, and this added up to 2 crore rupees or $437,000 at the time. Now, to onboard customers, Nithin made use of the communities of traders that he'd been fostering since 2001 on Yahoo Messenger and Orkut, but they only had a 6.7% success rate. Of the 15,000 investors that they called, they were only able to onboard 1,000 of them in the first 6 months. Robinhood, on the other hand, was founded in 2013 by Baiju Bhatt and Vlad Denev in Silicon Valley. And having studied at Stanford, they were able to access the Silicon Valley venture capital ecosystem, raising a $3 million seed round and a $13 million Series A before they'd even launched their app. And they'd also just come from Wall Street. Their previous business, Kronos Research, sold algorithmic trading software to hedge funds and banks in New York. And so they were able to tap this network as well. And in no time, they had a waitlist of 1 million people eagerly waiting to download their app. And of these 1 million, they were able to onboard 300,000. That is the end of round 1. Zerodha is in rough shape. The odds are definitely stacked against them, and Robinhood doesn't look like they're gonna have any trouble winning this fight with that war chest, not to mention their massive early customer base. Now on to round 2, business model. Robinhood essentially pioneered commission-free stockbroking in the United States, which democratized stock trading and attracted millions of new traders that had never even considered the possibility of buying and selling stocks. But to sustain this model, Robinhood had to develop multiple revenue streams, and the largest one is payment for order flow, otherwise known as PFOF. With PFOF, Robinhood receives payments from market makers. Market makers are basically big financial firms that buy and sell stocks, and these market makers pay Robinhood for sending trades exclusively to them. And this is a totally different approach from how stockbroking used to be done, where traders would pay stockbrokers, and that's one of the reasons why this is controversial. Remember that if you're not paying for the product, you are the product, and that is definitely the case with PFOF, where all of the power now is in the hands of these market makers, but this model provides Robinhood with around 60% of their revenue. Additionally, Robinhood makes money from net interest income by earning interest on customers' uninvested cash, securities lending, where they lend stocks to financial institutions for a fee, and Robinhood Gold, a subscription service that provides benefits like interest-free margin up to $1,000 and access to premium research. Zerodha, in contrast, operates on a much more traditional model. They charge 20 rupees or 0.03%, whichever is lower, for intraday trades, and a flat fee of 20 rupees for F&O trades. These are futures and options. And this allows them to offer equity delivery trades at 0 commission for everyday traders who are investing their money long term. And this straightforward approach to their business has been highly profitable for them. And that's it for round 2. Zerodha has been able to keep their business model straightforward, while Robinhood's commission-free approach has forced them to monetize their customers in a variety of other ways. But how much money are they making from these initiatives? And more importantly, what does this mean for their bottom line? Let's find out in round 3, financials. So in 2022, Robinhood reported a revenue of $1.36 billion, but despite this impressive figure, the company struggled with high costs, $2.369 billion to be precise, $579 million of which was towards the salaries of their 2,300-member tech team. Zerodha, on the other hand, was in a much stronger position for FY 22-23. They generated 6,875 crore rupees, which is about $820 million in revenue, and as for expenses, these were primarily driven by fees and commissions, and they totaled 2,993 crore rupees, or $356 million. And their employee costs were notably lower than Robinhood's at 623 crore rupees, or $74 million. Zerodha has Robinhood on the back foot, but now they're getting ready to throw a knockout punch, because now that we have both companies' revenue and expenses, let's take a look at their bottom line. As an almost entirely bootstrapped business, Zerodha did 2,909 crore rupees, or $346 million in profit in FY 22-23, while Robinhood reported a massive loss of $1.028 billion in 2022. And just like that, it looks like round 3 is over. Robinhood is out for the count, and it's hard to imagine them coming back to win this match in round 4, but wait, what's that? It looks like Robinhood, they're back up on their feet. What is going on here? Okay, we're just getting this in from the ref right now. They're saying that Robinhood is turning things around in 2023, and it's a public company, so let's take a look at the data. So Robinhood did manage to turn things around significantly with a 30% year-over-year increase in net revenue, bringing in $1.87 billion in 2023. And more importantly, they managed to slash their losses by nearly half, reporting a loss of $541 million. And that improvement wasn't due to cost cutting, but rather stronger revenue generation, indicating a potential path to profitability in the future. Zerodha, on the other hand, faced a more challenging year. We don't have their FY 23-24 numbers because it is a private company and those numbers haven't been released yet, but Nithin Kamath in April of 2023 said Zerodha's revenue may decline by 30 to 40% for FY 24, which is almost the opposite of what happened at Robinhood. Later in August, Nithin did go back on what he said, saying that he expected revenue to stay steady, which would put it in the ballpark of 6,875 crore rupees, or $820 million, the same as FY 23. What an intense third round that was. Robinhood really turned things around in 2023, but I think this final round is going to be decisive. So let's get into market analysis. Zerodha has been a dominant force in the Indian stockbroking market since 2019, when it overtook ICICI as India's largest stockbroker by clients. However, just a couple of years later, in October of 2023, Grow surpassed them, claiming 19.9% of the market with 6.63 million monthly active users, or MAUs, slightly edging out Zerodha's 6.48 million MAUs. And by mid of 2024, this gap widened further, with Grow expanding to 10.9 million MAUs, capturing 24.7% market share, resulting in Zerodha's share dropping to 17.3%. Now, in spite of this decline, Zerodha remains profitable, and they are still bootstrapped, which is a significant achievement in a market with many competitors, including Grow, operating at a loss. Yet the pressure is mounting, with Angel One, another profitable player, closing in on Zerodha's position. The battle for the stockbroking industry is getting pretty intense in India, and Zerodha is feeling the heat. Unlike Zerodha, though, in 2019, Robinhood has actually never been on top, not in terms of assets under management or customers or revenue. They're kind of a small fry in the American stockbroking industry compared to the banks and stockbroking firms that they're up against. They had 23.9 million accounts at the end of 2023, meaning that they had less than 10% market share. Now, it is worth noting that we aggregated this information manually from each of these companies' annual reports, so this isn't a comprehensive market analysis here. This is purely for us to get a very rough ballpark, and Robinhood's true market share is likely much lower than this. That said, though, Robinhood's 5-year market share trend is positive. In 2019, they only had 5.1 million accounts, or 3.8% market share according to our partial data. So where they're sitting at now, 9.8%, is a very respectable 2.5x increase in market share. And with that, the fight comes to an end. So, who won? That's for you to decide. I presented you with the facts, now it's time to vote. Head down to the comments section and let us know who won this very first Backstage with Business Beatdown.